welcome back to another episode of Tech Pro Unicorn Podcast. I am your host, Michael Grace. Today, we are going to talk about financial freedom. We're going to do that with Tanya Targett Camacho. She's often referred to as the media darling. She is a former investigative news journalist turned financial and business development strategist. She created a six-figure revenues in her first 6 months, and then multiple six figures in revenues with her first 3 years. Her students span 12 countries and have generated over $7.5 million in free publicity, appearing in New York Times, Forbes, Huffington Post, CNN, BBC World News, and Fox, just to name a few. For those of you that want to follow along at home, the website to kind of go check out, you can see a picture of Tanya if you'd like, and it is the name TanyaTargettCamacho. That's her full name.com. You can go there. It'll take you to a book site where you can see a picture of her and her husband. They work together, which we'll also talk a little bit about. So, Tanya, thank you for taking the time and joining us here on the podcast.
Oh, my total pleasure. And that website is tanyatargettcamacho.com/book, as in book some time to hang out with me.
Awesome. Thank you for that. And then a little bit, first of all, like how did you wind up here, right? You have a media background, and now you're helping other people kind of, you're coaching and growing their business and helping them reach some cool goals. How did that become like where your life brought you to?
Yeah, I mean, it's crazy, really. I mean, my background is I'm a former investigative news journalist. I'm an award-winning news journalist. My specialty was sending pedophile priests to jail. Took hidden cameras in for 60 minutes, getting corrupt politicians sacked, and terrorism, uncovering terrorism. For me, it was always about, my dad was actually in the British Special Forces. And so he used to chase bad guys, and I wanted to chase bad guys too, but use a pen instead of something else. And so I always resonated with people's stories. I always had a very strong sense of right and wrong and justice and perceived injustice. And so, when I started my career as a journalist, I was doing that, and I became, as I said, the investigative news journalist. And having reached what I wanted to reach, I was kind of like, what am I going to do next? And so I ended up resetting that goal, as we do as entrepreneurs. And I started teaching business owners how to get on stage, how to sell their story from stage, how to get on TV and so forth. And my husband, Anthony, he actually mentioned this to me shortly after we met, like 5-6 years ago. He actually said to me, I've been thinking about working in the financial services industry. And to be honest, it didn't really appeal to me. I'm like, that's nice. Have fun with that. And then last year he got serious. He said, hey, I've investigated this. I'm going to get my license. Can you help me in the back end? And I was already running 2 businesses. I'm relatively tech savvy. I've had six-figure online launches. So I'm like, yeah, sure, I can help you in the back end. But depending on what I was going to be involved in, I needed to get my license, and he didn't tell me that. So I kind of going along the path, and I'm like, I've got to get my license. I'm from another country. Like, I live here in America, but I'm from Australia. And like Medicare or Medicare in Australia is free healthcare for everybody. Very different to what it is here in America. And that's just one example of many differences with very similar terms. And so I didn't want to just study the exams, plural, to pass. I wanted a very deeper understanding. And so I put my investigative journalist hat on, and I started digging. I read a lot of government reports, a lot of stats about poverty here in America, about college debt, credit card debt, all that kind of thing. And I started to really see how horrific it was. And I started thinking to myself, this is kind of interesting. I was just kind of germinating, the seed was germinating. I thought, this is kind of interesting. And then I started to discover what I thought wasn't even true. And you might have heard of this, Michael, and I'm not sure if your audience has, but there's a thing called the 0% tax bracket. And when I first heard about this, I thought it was a con. I thought it was too good to be true, right? Where you can grow money and whatever grows, that interest, the compound interest, you don't get taxed on it. And what I discovered was it was how Walt Disney built Disneyland. It was how Ray Kroc built his McDonald's empire. It's how J.C. Penney funded the retail chain and so many others. And also in that 0% tax bracket, how people were protecting their assets. For instance, recent case, Johnny Depp versus Amber Heard. If you go and check out the financial advice online, Amber's being told to lock a lot of her money away in different kinds of financial products. So when I started researching this and I found out that it was legitimate, and as an entrepreneur, having sold a lot of money from stage, we often sometimes do feel exposed if someone wanted to be litigious. And I thought to myself, how did I not know about this? Why did no one teach me how to fund my own dreams, how to wrap insurance around my own money? And I thought more of my colleagues, more of my fellow entrepreneurs, as well as families, need to know about this. So I started to get a little bit passionate. And then I had to also be congruent with it, right? Because it's a big pivot from journalism to the world of finances. Because congruence is so important, because if you're not in flow, then nothing flows. So I was really meditating on it. And then it dawned on me that as a journalist, by the time someone comes for advice on how to share their story from stage or how to get on TV, that sad story has already happened. What if in the financial services industry, I could get in earlier? What if I could help rewrite that financial story and I could give them a different outcome, a different story? And so that's how the pivot unfolded. And I started working full-time in the industry about May or June of last year. So that's 2021. And just in the first few months, with the difference that it made in the families, the lives of the families that I was working with, I was hooked. I'm like, this is so cool. I can help people immediately. I can see the impact this is making immediately. We need to reach more and more people and help them do the same. So yeah, very, very different. But you're very excited to be here and help people create that, financial independence and rewrite those stories.
I love it. I mean, it sounds like a very pure, altruistic kind of like ability to help, right? I think, we've had guests on talking about building businesses. We've had guests on talking about insurance and all the complexities. We've had financial planners on talking about, financial planners. We've had crypto people on. And when you kind of look at that, you go, man, that field is confusing, right? There's a lot of options. There's a lot of offerings. Especially I think the layman, right, that hasn't taken the deep dive that you have is often like, what do I do, right? And that's like, what do I do for retirement? Could be, what do I do to buy a house? Could be like, what do I do to manage my credit? What do I do to, minimize my tax exposure, right? There's all these questions. And, I have a bachelor's in business. I have a master's in business. That was nowhere in there, right? That was nowhere in the curriculum of business was, hey, how do I manage my own personal finances? To grow and protect my assets. And it doesn't matter what age people are at. I think my 86-year-old mom, has a little bit of savings. And she's like, how do I protect this? Right. Down to, I have kids in the office that are 21 and this is their first job. And they're like, how do we establish investment tools that provide growth? Right. Everyone has that question. I think regardless of what stage in life they are, they're always like, wow, this is confusing. I'm going to make the best guess I can. That almost is like what it feels like.
Yeah, I totally agree with you. There's so much information out there, and there's so much politics involved too, right? For instance, and when your audience and yourself, Michael, whenever you're researching or you're listening to an influencer or a commentator on TV or YouTube, wherever, do a little bit of investigative journalism and just find out, because quite often when they're talking up one product and they're talking down another product, it's because when you go through a few hoops, they are actually selling those products. And so you really want to have an impartial view. And then in terms of what's the best advice? And it is a little cliche to say, but it is very customized and personalized, right? So what that 21-year-old might do might be different to what a 45-year-old might do, or your mum. I think she mentioned your mum's 85. Like if you want to protect your money, so depending on where you are, what you want to achieve, some of the things you're also talking about. But not, yes, buying a home. What about funding, your entrepreneurial dream? What about setting the kids up so that, there's money to go for college that can be used for other things if they decide not to go to college? So, for instance, currently, many parents do a 529 college savings plan. Nothing wrong with it.
That would be me. Yep.
Yeah, we do them too. There can be a problem with that, though. There's a couple of problems with that. Number one, the savings that you have in that 529 college savings plan are counted as an asset when you go to apply for FAFSA funding for your free financial aid. That money is used against you, okay? It's counted as an asset. Number two, what if your child decides not to go to college? What are you going to do with that money now? You can access it, but you're now going to be hit with penalties, and it's no longer tax-free because it's not being used what it was intended to be used for. Whereas there are other products out there on the market that allow you to get a similar, comparable, better, sometimes smaller return because it's not in the stock market. It depends on how risk tolerant you are. So you can get a very similar return because a lot of people don't realize that the 529 is actually in the stock market, right? So when we had that crash, I think back in like 2008, there was like an 18% drop in college savings plans. Not going to impact you if your child's in primary school or elementary school and you still got time to recover. Is going to impact you if you're in the final phase of that education plan. So really understanding what it is that we are wanting to achieve and really diving into what some of those, nuances might be to make sure that you have what's best, for your family as well, in terms of not just the college, not just the house, the business, the car, but what do you want when you do quit working? What age would you ideally like that to be? What income would you like that to be as well? So it is very individualized, obviously, because, every household is a little bit different, but there are some basics that we always want to look at. We want to look at multiple revenue streams. We want to look at, the horrible word budget. It should be a 4-letter word, right? But we have to understand what's coming in, what's going out, and what investments we have. And I think this conversation really scares a lot of people, Michael, because they'll go, I don't have any investments, so I'm just going to switch off. It's okay, right? It is never too late to get started. Yes, obviously, it's better to start when you're 21. But it's better to start when you're 45 versus when you're 65. And it's better to start when you're 65 versus when you're 85. Procrastination is the number one killer of financial freedom and financial independence. And people think, I was going to save $500 last month. I'll just save $500 in 3 months' time. Problem is that it's not just the $500, it's the compound interest that $500 was earning. So, it is an uncomfortable topic. It's an uncomfortable conversation. I see this all the time. I understand. But it's one that we have to have. And there's no one coming to rescue us and provide us with the life that we want. And Social Security, is that even going to be around?
Yeah. I see families all the time, that don't even have an emergency savings, right? Like and then, a couple tires went out and they're like, wow, I don't have $800. I don't have any way to get it. They don't have savings. They're just paycheck to paycheck. And it just feels so, I think for those people, it feels so far away, right?
Yeah.
I usually tell people, hey, just set an envelope aside, right? Put $10 a week in an envelope. Give up Starbucks, right? It's so funny. Time and money, people go, I don't have enough time and I don't have enough money. And then you really look at what are people doing with their time and money? And you go, well, you have time. You're just not aligning the time with what you say your goals are, right? You're not working on building a business. You're not working on things that relate to growth. And then the same thing with money. They go, I don't have any money, but they're going to Starbucks. They're, buying things that don't appreciate. they're spending it versus saving it, and and that can be a great lifestyle, but at some point that's just not sustainable. It's really interesting. I mean, I'm interested in your perspective as people come to you and you're helping people. Are you finding them at all kinds of varying stages? I mean, do people come to you late in life, that 45-year-old, they know and they've just been ignoring it for 20 years and they're like, help?
Yeah, it's to be very candid, it's terrifying. I find the people in their 20s seem to be a lot more switched on. And like, if I think about myself in my 20s and they would come to my workplace and they talk about retirement, I'm like, whatever, I'm going to lunch, I'm going away I just wasn't interested. But I find that those in their 20s in this generation do want to know, do want to plan. And honestly, that's the perfect time. And even earlier, I mean, if you have a college savings plan, you're saving, the minute your baby's born. But there's other places too. There's all kinds of things out there on the market that are called $1 million baby funds to put money in with massive investment, with massive returns, without the risk, which sounds too good to be true. That's what I thought too, but it does really exist. It's just, a matter of education. But I find the majority of the families that I sit with are anywhere sort of from, say, 35 to 65, and they're not protected. They're not shored up. They don't have enough savings. They don't have any investments. They've withdrawn their 401k. There's nothing there anymore. And then, of course, the older that we do get, as we do move into our 70s and our 80s, our options then become very limited. So I think it's very scary. I mean, it doesn't matter how old you are. There's help out there for you, but obviously the message here is the earlier you can start, the better. But just what you were saying before, Michael, I thought it was a really good point. You mentioned giving up Starbucks. Now, if you do some kind of Excel spreadsheet, and, for those who, if you do decide to come and sit with me just for a chat, I can send you a spreadsheet that you can use. You can just put all the details in, completely obligation free. What's interesting about when we actually have a look at all of our expenses, which is a nasty process, but when we do, we actually identify areas where we can save money. So, for instance, when I've done this with entrepreneurs, and being an entrepreneur myself, I sat with a lady a few months ago, and she was spending a crazy amount on website hosting, her CRM, her contact management system, and a few other technical aspects. And I said to her, I can save you $300 right now just by sending you to these providers over here. No affiliate link, but we've now just freed up $300 a month for you to invest in your future. So by simply putting it all down on paper, you can actually see what you're paying. You can shop around for a better deal. So you might not even have to give up your $10 Starbucks. You'll also start to see, like if you have the app that we use in our household, the free financial app we love is Mint by Intuit. And the reason I love that one, is it syncs not only with the banks, but it actually imports all of our bills, utilities, roadside assistance. So I don't have to manually add things. It's all done. But you can go through and check it and go, what was that for? I canceled that. What's that fee for? So you can find the money when you know where your money is going. But if we just put our head in the sand and we go, got no time, I've got no money, unfortunately, you're always going to have no time. You're always going to have no money. So when it comes to saving, which for some people, I think the majority of people should be another four-letter word, right? We love spending, but maybe not saving. If we consider people who save nothing, 0%, you'll have a very high probability of being broke. What I would encourage all of you to do right now, if you're not saving at all, right? So just imagine mortgage, rent, right? Your money comes into the house, you pay your mortgage or you pay your rent, you pay your bills. You would never not pay them or you'll be out on the street. And so what you do is you pay those, you play, whatever's left you save. The problem is there's normally nothing left to save. We need to switch it the other way. Before we even pay our rent, our mortgage, or our food, we need to take 10% of what comes into the household and put it into a set and forget savings account. Just start with 10%. So if you've got $5,000 coming in per month, $500 goes into a set and forget savings account. Then you pay the mortgage, and that might freak you out. And I get it. We've done it. And for the first 3 months, it was tight, but you adjust, and now you have savings that are growing. So start at 10%, even 5% if you can't do 10. Where you ultimately want to get to is 20%, 25%. Saving what's coming into the household, start putting away for the future.
I love that, right? A similar exercise that we did was we just I downloaded a year's worth of bank statements, right? And anyone can do that. It's totally free. Your bank will get you the Excel files of your bank statements. And we just went through and we kind of categorized by month. We found the recurring stuff, and we're like, wow. So we're not Red F 5 kids. So we're not big TV junkies, but our kids mooch off of our subscriptions, right? So when you add up, we're like, hey, yeah, we don't pay for cable. Look at us. But we have Hulu and Disney Plus and Netflix and you name a streaming service, and I'm probably
Pandora, paying. And then Spotify.
Yeah, and I was like, wow. And then there was like stuff on there that I'm like, what the heck is this? And I'm like, oh, it's $30 a month, and I signed up for it and forgot to cancel it, right? And I was like, wow. I mean, it had gone on for like 2 years, right? $700 gone.
Yeah.
Donation to whatever crappy service I decided to cancel after. But if you just sit down and look at it, right? I love your you don't have to give up your Starbucks necessarily. If you just pay attention to your bank account.
Yeah.
And I'm horrible at that, right? I'll look at my bank account once every 3 months. I don't know. I just don't pay attention to it. And then when I do, I'm like, oh my gosh, what has been going on, right? I'm like your worst nightmare because I just kind of like ignore all this, and at some point it'll catch up to me, and maybe I need to book a call. But it's but what I do is stuff that I'm passionate about, right? Like we just had a granddaughter, and I was like, the first thing, everybody's like, ooh, the granddaughter, we need to buy her outfits, we need to do this. And I'm like, I had to set up a 529 plan for her, right? So that she has $20,000, $30,000 when she's of college age that she can go to college, right? I did that with all my kids, between $50 and $100 a month. You're not going to miss it. And I set up investment vehicles, and they all graduated. My son's going to NAU, $40,000 because he got a full ride scholarship for housing and such. And I didn't have to take out loans, right? Because I had saved appropriately, and we're just paying.
Well, we just did the same. I mean, my accent, I'm Australian, and I moved here with my daughter, going on our 6th year now. So she came in a sophomore year, and I was terrified because she's a very smart kid, and I knew she wanted to go to college. And I'd heard about how expensive college was, and now I was facing that reality, whereas in Australia, college is free. And I kind of got, in my previous life working in PR, I had a client who actually was a college counselor, a private college counselor. And she was talking to me about different things to do with finances, which kind of sparked a little bit of an interest. But I didn't really pay too much attention till I actually went through to get my various licenses and did my own research. And so, we made sure in the last 2 years that our finances were structured properly. And it was really interesting because I think it was October or November of last year, I went through the FAFSA gauntlet, that federal financial aid, the free money.
Been there, done that.
Yeah, and I thought, well, this is going to be interesting. And I'm still a bit of a cynic, right? Because I'm thinking, all right, I've been told that money in these products won't be used against me, but money in a 529 will. Let's see what happens. And I kind of held my breath thinking that, everyone had lied to me. I was pretty sure they were. And then on the FAFSA form, it said, okay, list assets, savings accounts, bank accounts, not included in life insurance policies. And I went, yes. We got full funding, and my daughter has a full scholarship to Cal State Fullerton, and she'll have no college debt. We'll have no college debt. So there's a lot to be said, and there's a lot out there. And that's the thing too, is that, and it's so cool that this is what you do with your podcast, Michael, because more people need this information and this knowledge. because without it, they think then you have to spend all this money to go to college. Or your child is going to be, in debt. And it doesn't have to be that way. There are plenty of celebrities who pay nothing for their children to go to college. I'm talking about the college scandal. I'm talking about how they structure their finances and where they put their assets so that they can't be used against them. And then to circle back to what you were saying before too, is you were talking about that recurring subscription that you didn't know that you'd had. I actually had canceled a subscription and I noticed it coming in, tracking, and I got over it took me a while to notice it. So I hadn't been paying attention. And then I started working in finance and I'm like, you got to walk the talk here, Tanya. So I did it and I went back in time and I got over $2,000 because I could prove that here was an email canceling this subscription and here it is coming out every month. Now, if I hadn't have done that, that money would have just kept coming out. So you might get more than your $10 Starbucks card.
Well, and I love that, right? My wife, I tend to be very generous. I try to be generous with time. It's the thing I have the least of, and I try to be generous with money. And my wife has a saying that she always tells me. She's like, "Stop giving money away," right? And it doesn't mean like, "Oh, don't donate to the homeless or don't give to a church or a charity or such." It means like we do a lot of silly things that we don't really pay, that I shouldn't say that I don't pay attention to, and essentially give money away, right? Whether it's to, I have a bank, right, from an account from years ago that got sold to another bank and sold to another bank. And I just got a letter, "Oh, your bank is over, you're getting charged $10 a month now on this account." And it was like a set it and forget it account to me. It doesn't have a lot of money in it. But I was under whatever their threshold was on that account, and now they're charging me $10. And I'm like, oh, the administrative hassle of that is crazy. There's a couple $100 in that account. Who cares? I'll just like have fun with that. Charge yourself $10. And my wife's like, are you crazy? That's like a couple $100 that, you could give to your granddaughter. You could, heck, I'd be fine if you would draw it and we could go blow it or whatever, right? And I was like, right. And she's like, stop giving money away. And so many times, if you just pay attention to it, almost make it a game, right? I'm big into gamification. Make it a game. Go find $100 a month out of your budget, right? That's just for silly things. Or stop paying for Hulu or Netflix for a couple months and see if you miss it, right? Go meet those other humans that are walking around and get out of the plastic box. It's so transformative when you do it. It's really cool. You mentioned something that I want to drill down on just because I want to understand it myself. You mentioned something called the $1 Million Baby Club. Like, could you tell me what this $1 Million Baby Club is? Because I think people, when they have kids, right, they either don't save or they save by putting stuff like my mom bought. Get this. So my mom worked for the Federal Reserve Bank, and she bought all my kids savings bonds, or like U.S. savings bonds. She bought them at $50. They were valued at $100, and every month she had $50 taken out of her check. And in 20 years, the savings bonds are worth double, theoretically. They adjust now, but theoretically they were worth double, right? And she has stacks of these for the kids. When they become 18, they all get their savings bonds that they go, thanks, Grandma. I have no idea what the hell this thing is. I have no idea what to do with it. It's kind of crazy. But people are confused. So maybe share a little bit about like you're having a kid or a child. What do you do?
Yeah, sure. So the industry or the colloquial term is $1 Million Baby Fund, and they've been gaining an increasing popularity probably for sort of the last 5-6 months. And I think in probably about 4 or 5 years, it'll be the done thing if there's enough knowledge out there. So when we look at where we want to put our money, right, we have where we live every day, where we get taxed, right? It's called the tax now category. Bank accounts, if some money grows in there, they'll send you a little bill. You've got to pay tax. And then we have the middle category, because there's 3 categories: tax later, which is where our 401ks are. We put money in, it grows. Hopefully our employees matching it. And then when we go to take it out, Uncle Sam wants his retirement, and so we have to pay our tax. And then there's this other category, created by the wealthy for the wealthy. And this is the one that got me incensed right? So the $1 Million Baby Fund is very similar to when I talked about Walt Disney and Ray Kroc and J.C. Penney. So the $1 Million Baby Fund, now it is attached to life insurance, right? And I know that really scares people. And there's a lot of influencers out there who, talk very negatively about it. And as I mentioned, have a look at why. But it's set up by the wealthy for the wealthy, and it's attached to a life insurance policy for various reasons. Now, how it works is this: I have a newborn baby, or someone I know, or like for instance, you have a newborn baby, and you want to set up something called, and there's different products out there. It's called a cash accumulation life insurance policy, or CALI, known for short. And what it is two accounts in one. One is a life insurance policy. One is a savings account. Okay. Now, it's kind of scary. You're like, I got a newborn baby. Why I want to buy life insurance? Well, unfortunately, things can happen at any point in time. But the life insurance puts the savings into the 0% tax bucket. That's why you've got to have the life insurance with it. Why is that? Because money that you put in there, you withdraw as a loan, right? This is the legal workaround. You never actually have to pay that money back if you don't want to, right? You don't have to pay it back, but you take it out as a loan. And because it's a loan, you're not taxed, because the tax department, IRS, consider that's going to be paid back. Okay. And so the money can grow in there. And you mentioned $50, $100. I mean, I've got clients with newborn babies putting in $200 a month. You can, and it's tied, right? It's called max funding, which is horrible jargon, but you can literally, by the time, one of the recent ones, she's putting in $180 per month. By the time she is 21, 22, she's going to have $45,000 in that savings account. It's not going to be used against her when she goes to college. She can still get full funding. She can use it on college. She can use it in a business. She can use it to buy a car, down payment on a house. That account is permanent. So that money keeps growing. And, I haven't seen one yet that doesn't return in excess of $1 million, $2 million, $3 million because of the age that you're starting it at. So you're starting it when they're a baby. Instead of putting the money into a savings account, you're putting money into a savings account attached to a life insurance policy so that you don't have to pay any tax on the money growing. And again, like, I wish I'd have known about that, because I started my daughters when I came here to America. So I only had a few years. Imagine having 18 years to put in $50, $100, 200, whatever it is, to grow that money. You can retain ownership of that. So instead of handing those bonds to an 18-year-old and they go, what the heck should I do with this? You can hang on to it, right? You're the owner. The child's obviously the one who's covered, who can get the money. And then when they're mature enough, you can hand it over to them, and they can take over the payments. So that's the $1 Million Baby Fund. And it's really quite extraordinary. And I would encourage everyone who's got kids, who's got grandkids, nieces and nephews, what you do is, go and speak to your financial person that you trust. Talk to them about that cash accumulation life insurance policy, the $1 Million Baby Fund. And another great workaround, and I see families do this, is, if things are really tight in your house, what you can say to your family is, hey, I'm starting $1 Million Baby Fund. So, little Jeremy doesn't have to get college debt or whatever, doesn't have the financial struggles we've all had. Instead of sending a gift for the baby shower or his first birthday or Easter or Christmas, can you put $25 here? Or can you just give us 25, however you want to work it, that money goes straight into the savings account. So now you've got the family funding it, so you can be setting your child up for financial freedom without hurting the finances in your own home. And you can tell I'm very passionate about that, Michael. I just wish everybody knew about it. Can you imagine if our parents had known? And this has been around since it's been around. I'm not going to quote the date because I don't want to get it wrong, but we should have it. Let me say that.
I love it.
Yeah.
Yeah. I did some consulting in the financial services sector, not as any type of financial agent, but I was consulting from a technology and strategy perspective with a very large national financial partners. They have financial brokers kind of all across the country. And I got to meet, a very elite group of financial planners that serves high net wealth individuals, right? We're not talking people that are in the hundreds of thousands of dollar range. We're talking these are millionaires and people that are in exclusive wealth. And I met a guy who owned one of these agencies. He was 87 years old. He still owned his agency in Hollywood, lived in Beverly Hills, lived on the penthouse, and him and his wife, and they were just darling. And their customers were like Elvis Presley, Frank Sinatra, Dean Martin, right? And when I met him, he was 87. This was many, many years ago. And
That's very cool.
And I said, like, wow, they're all coming to you, like you must have all the stock tips. And he turned around and he said, it isn't stocks, it's life insurance. And I was like, what? Like, what did you just, and he just dropped these words of wisdom on me. He thought I was the funniest guy, and I said, what's the secret to great health? And he turned around and he said, tomato juice every day, 6 ounces tomato juice. And then he'd walk off down the hallway and you're like Yoda, come back here. You're amazing. Like, tell me more. But when I asked him about how do you service these high net wealth individuals and protect their money and grow and invest, he said life insurance. It wasn't stocks, bonds, and stuff. And I was just blown away. Naturally, I didn't do anything with that information. Shame on me. But that's what he said. It was like life insurance is the key.
I know, and for some reason it's a dirty little word, right? And I think that's because everybody's got their own agenda. But the other thing too about these policies where you can put your money, grow your money, pay no tax on your money. How is that possible? Because the IRS considers that the money, which is simply being diverted from a bank account, right? You already paid tax on that. It's gone into a bank account. You just redirected it. So there's no legal way to never pay tax, but there's a legal way. Obviously, you don't have to pay tax twice. So I'm not saying don't put it in your 401k. If you're getting an employer match all day, every day, free money, do it. You want multiple revenue streams. Over in the 0% tax bracket, not only does the money grow and then there's no tax on it, but it's also non-disclosable, non-reportable. So when O.J. Simpson, horrible case, or O.J. Simpson, example I should say, went through in civil court, ordered to pay damages, didn't pay any. Why? His assets are in a life insurance policy. What's the advice just given to Amber Heard? If you have a look at the financial commentators online, stash your money in a life insurance policy. I'm not sure if that would actually work in this case because you're supposed to do it before you have legal trouble.
Yeah. Before you owe Johnny Depp $15 million,
Exactly. But there's a lesson there. And again, like as an entrepreneur, I'm thinking I can protect my money from lawsuits. I mean, I live in California. It's a little bit litigious. America as a whole is a little. Why do more people not know about this? But because of agendas, life insurance has become, a dirty word. And you have to have a look at the fine print. Don't get me wrong. Not all policies are created equal, but there are some exceptional products out there that like your example of that gentleman who looks after extremely high net worth clients. Where are they putting their money? In a safe environment that still gets a good return without the risk, where the money is protected against market losses and financial losses and being sued.
I love it. It's I always look at industries as a whole and go, man, you really do yourself a disservice. And when I look at life insurance, it kind of falls in that category for me, right? Like there isn't a week that goes by. It's probably not every day, but once a week, right? I'm getting some junk mail about life insurance, right? My AARP, my veterans, my this, everybody, my bank, you get $1,000 free life insurance, and look, you can get more. And it's the wrong kind of life insurance, right? It's not really investment vehicle life insurance. It's term life insurance or such. But I think you just, as consumers, we get overwhelmed by all this life insurance garbage mail. We're like, well, if garbage mail is coming from life insurance, then life insurance is garbage. And I think that's how people are getting, that mindset. They're like, enough with the life insurance nonsense.
Yeah, and then I think also attached with it are, the products that exist today are very different to the products that existed years ago, like when our parents, were in their 20s, and you did pay a lot of money and you didn't necessarily see that money back. And so that doesn't help the situation, but it's very different. But like anything, not all champagnes are created equally, not all, to use my favorite analogy, and then not all life insurance policies are created equally. But I think the added doozy is that it's not just life insurance, it's in the whole topic of finances that no one wants to talk about. We just want to bury our head in the sand. But the reality is, we will wake up one day, our head will be forced out of the sand, and where are we going to be? What money do we have? What protection do we have? What kind of gap insurance do we have? What kind of investments? Whether or not we can put our head in the sand until we're 97. But reality is going to hit one day, and unfortunately, it's hitting a lot sooner, a lot younger than it used to.
Yeah. You talked a little bit about people pulling, like, they'll come to you and be like, oh, well, I had a 401k, but I pulled all my money out.
Yeah.
Which is something you should never do. The tax penalties just make it ridiculous. You might as well light $100 on fire and run down the street, right?
Oh, yeah.
Same effect.
Taking
a loan against your 401k is different than withdrawing from your 401k. So some 401ks let you take a loan. You kind of give yourself interest back. They still charge you interest, but you're paying your interest back essentially to yourself, assuming you don't default on the loan.
Yeah.
I think a lot of people do that because it's like, oh my gosh, I'm having some sort of an emergency, right? How do I get cash? And they turn to their 401k because sometimes that's, their largest, most accessible asset. When we talk about emergency savings, like what is that? What's the right number, right? Or does it vary by family or?
Not really. I'm sure everyone's got their opinion, but the industry standard pretty much is a minimum of 90 days, ideally, so 3 months, ideally 6 months. But as your very first goal, you want 3 months of non-discretionary. So rent or mortgage, food, personal care, pets, things that come out of the house that you can't live without, right? So if suddenly, you lost your job or you got sick, you can focus on getting better. You can focus on finding another job, and you've got 3 months to do it. Okay. Now you want to get that money. You want to save that money. You want to put it, have that in your savings account. If you do have a cash accumulation life insurance policy, you can put it there too, right? And get a higher return. You can still get access to it, but you can just have that in a savings account, right? Not a penny more, not a penny less, because the interest is terrible. And then you will get taxed, right? It's not going to grow. And unfortunately, the interest in the banks is not outpace inflation. So if you have your money anywhere where the interest rate is below inflation, you are going broke slowly and you're going broke safely. Your buying power is diminishing. So you want to have that 3 months. It is not for, a restaurant on a weekend or a trip you've been really wanting to take. It is purely there, and let's hope you never even need to use it. You just keep it there. Get that 3 months worth and then start chipping away to put 6 months aside. If you have a look at COVID, right? We wish that, we hope we never have one again. No one predicted it. How many people didn't even have $400 in their savings account? Those of our clients that had 3 months were like so grateful and so thankful. The even smaller number that had the 6 months, they were just like, they didn't have any pressure, they didn't have any stress or anything. So 3 months is your first goal, and then work up to 6.
I love it. That's great. So when if folks are like, wow, this is fascinating, I always tell people, right, whether it's a coach or someone who's going to help you with financial guidance, right, find somebody who has a story that resonates with you, right? Find somebody to be like, wow. And you might be like, man, Tanya's got this really cool story. It's really cool how she did this midlife pivot. It's really cool that it's a husband and wife team and the husband's still alive. We were joking pre-show about that, right? We're like, how do the husband and wife work together, right? Like that can be That's a little too much time all together doing all the same things, right? We see each other at home. We see each other at work. We see each other all the time. Oh, we're sick of each other is usually how that ends. And you guys are still together and doing well, and it's awesome. But like if they're like, yes, I want to talk to her, and they go to the site and they book the call, like what happens? How do you help them?
Yeah, great question. Firstly, if you do come to a new book or call, it is really about me getting to know you and you getting to know me. And one of the reasons I've always had such a great reputation in journalism and public relations previously is because I'm very, very honest. And if I can't help you, or I don't think I'm the right person to help you, I'll try to introduce you to the person who is. So this is all about me understanding where you are, what your family situation is, what your goals and your dreams are, and you also spending some more time with me and getting to know me. And then from there, if you decide you'd like to move forward to the next step, then we start looking at your budget. Then comes the jump off the cliff, and I hold your hand as we then have a look at, okay, let's have a look at what's coming in, what's going out, and now let's pair that with our original time, because we'll meet on Zoom. Let's have a look at some of those goals and those dreams. Let's see if there's any shortfall. If there is, and 100% of the time there is, how can we shore that up? And what's the best way for you individually? Because some people, if they're young, they go, oh, let's just put it in the stocks, or let's do variable. But if you're, which means you can have the highs and you can lose it all, right? Whereas you might go, you know what, I do have a shortfall, but I just want to have a steady. I don't want any of the risk. So then, based on what your preferences are, based on your goals and your dreams, then I would go away and have a look at different options for you, and then bring them back and share those with you. So it's a very non-pressured, no pressure sell, really getting to know you and understanding you. And if I can help you, wonderful. If I can help you by introducing you to someone who can help you, amazing as well. Yeah.
I love it. I jokingly say I'm just blessed with great guests, right? I try to filter my guests and really look for people, that I think add value to the listeners, but people that are trying to do the right thing, right? Which sure, there's an upside, right? If someone joins up and does investment products and such, sure, there's a positive side, right? But that's not, you can just tell that's not what's motivating you, right?
Yeah.
You found a passion and have an interest to truly help people understand a very, like, I always tell my guests, right, when I write down notes that, I'm learning, right? Like, I had no idea about cash accumulation. Why? I mean, I did, but not in this level of detail, right? And the transparency with which you spoke about it. I have a love-hate with Mint, but, that's just because I'm a technologist. But
yeah, I kind of do have that too, but I keep going back. I leave Mint and then I end up coming back. Like,
yeah, there's not a whole lot of great options to
no,
Mint.
there aren't.
No. So Mint's kind of, I'm like, I get mad at their programmers, which has very little to do with the software. But so we covered a bunch of stuff. I mean, to me, there's a lot more people should talk to you about, whether you're investing just for your family's future, or whether you're single and no kids, or
Absolutely.
If you're like me and you have 5 kids, now you're starting to have grandkids, and she's amazing. So I want to do my part to contribute to her ongoing success. Or you're 21, like the guys that I'm staring at outside in my office, that are in their first job, and they're like, how do I navigate this? It just helps to have a coach. What I love about your process is you don't just be like, oh yeah, are you ready to invest? Great, send me money and I'll help you, right?
Yeah.
You talked about a partnership where you're actually helping them look at their budgets and such. And sometimes having a third party challenge you is much different than when my wife and I look at our budget. She'll be like, what's this? I'm like, I need that. And she's like, you don't need that. And then I'll be like, fine, then you don't need that. And we get into this ridiculous argument over our budget, because she wants to have this, and I find it silly, and then she finds most of what I do silly. So having somebody kind of walk you through that,
mediate.
Yeah, that's awesome. That is worth the booking right there.
It is. I have to. It is always interesting whenever I sit down because if someone that I'm meeting with is married, I do ask that living together. I ask that them be there because it affects the household. And
Yeah.
I've never sat down with a couple where it isn't interesting, and you can just see it coming. Go, all right, now let's talk about this, and then you could see one of them like, if we're talking about personal care, often the wife will be like, and I'm like, it's all right, we'll come to your hobbies in a moment, So and then she's like, okay, phew, yeah. So it's always interesting, and having that third party there really helps. And I think what also helps is, I've sent the spreadsheet to people as well. Sometimes people are like, oh, just send me this expense spreadsheet and I'll fill it out myself. People just don't. It's too hard. It's so much easier when someone's sitting there and go, okay, now what do you spend on this? And then you just write, because this is what we do for a living, right? What about this? What about this? What about this? What about this? And so it's much, much faster than sitting there looking at it, trying to figure it all out. So whether it is with me, whether it's with someone else, please do find someone whose story you resonate with, who you resonate with. But I think most importantly, Michael, someone who speaks your language, right?
Yes.
You want to understand what it is that they are saying to you, and you really want to understand all the ins and the outs. And I think the biggest thing in the financial services industry is there can be some shame around finances. And you can I've heard many stories of people sitting with a financial advisor and they didn't understand it, but they didn't want to admit or ask questions because they didn't want to look silly. If that's the case, that person's not for you. You've got to feel really, really comfortable because this is your future and you need to be asking questions and you need to get the answers that you need so you can make the best decisions that you can.
I love that, right? And shame is an interesting one, right? Like some people are embarrassed that they're in the financial condition they're in. And it's very private, right? Our financial future is very private. We'll put out our resume with our job history, but we don't put out, and this is how much I have in the bank, and this is how much or how little I have in investments, right? It's almost like, how much do you get paid? How much is your salary? What's your annual comp? It's things we don't talk about openly. And in this case, a lot of times it's like, I know I'm not on target, right? And I'm speaking for me. I know I'm not on target. I have a very unique situation, and there's a reason why I'm not on target, and it's okay. And my wife and I are aligned that we're not on target, right? It's okay. But for those of you that aren't, and you're feeling that guilt, you got to let that go, right? You got to start somewhere, and with someone that'll meet you where you are, right? You have nothing in savings, and you have no life insurance, and you're not doing employer matching with the whatever percentage they're in getting that free money, like. Find someone, right? Whether it's Tanya or someone else, it might be a friend, right? Somebody who's really that's really into investing or whatever. Maybe they're willing. Find somebody and let go of that guilt. And once you get going, it's like a drug. It's like, ooh, I did it. I want to do a little bit more. I started with this. Now I'm going to add to it. Now I'm going to bump it up. Oh, look at that. Ooh, my investment did this. Ooh, this. Ooh, that. And you're just like gamified into it. The financial tools are so prevalent. Technology's really helped, right? You're like, wow, I've got an app and I can watch real time what's happening and I can check this and it's really cool. And please don't be afraid, and please reach out to somebody that can help you. Tanya, thank you.
You're so welcome. And look, and that person might be my husband too, right? So my husband and I, you mentioned, we work together. If you feel more comfortable sitting with my husband, please do. My number one top tip, we were talking about this before, when you're working with my husband and I have a wonderful business together when we figured out what we needed to do. And that was play to each other's strengths. So what he's good at, he just does. And what I'm good at, I just do. And then it comes together and it's just magical. So that's my top tip if you're working with your partner.
I love that. And prior to the podcast, she had given me some great travel trips, right? She mentioned she's from Australia and she travels back and forth. So perhaps, the whole travel thing is really cool to me. We haven't done anything on travel, and maybe we will. We'll get a little panel together and you'll be part of that for world travels, which is really cool. So thank you for joining us. Thank you for just openly sharing your journey and sharing all that you have about all the different investment vehicles and demystifying budgeting and such. So appreciate all that you're doing just in the career that you and your husband have, helping people, and you taking the time on the podcast.
My pleasure, absolute pleasure. And thank you for having